Hey, everybody. Thanks for joining us. We really appreciate it. I'm Matt Daimler from StreetEasy. I'm going to be your MC today, talking to you about all the great stuff we have planned for you guys as buyers or potential buyers. We've got a great lineup today. We've got some time from our specialist team to talk about the actual marketplace here and talk about what's happening that we see in the market. We've got some agent panels that we're going to do that should be really interesting. We've got some stuff about mortgages. And then we've actually got some first-time home buyers who just finished the process. And they're going to actually be here to tell us sort of the tips and tricks. So it should be a pretty good lineup, pretty good event. We've got, for the Q&A, there's a couple of sessions here that are going to do some questions and answers. The old school way is raise your hand and bring a mic and things like that. But we're in the new school, so yeah, they thought I wouldn't get a laugh for that. We're in the new school, so I want to make sure we check out some new tech. There's an app called Slido, and so you can download it at slido.com. And what it does is actually lets you ask questions right from the comfort of your seat. If you see a question you like, you can vote it up. And so those are the questions that we're going to ask on stage at the end of some of these sessions. So after you download that app, it's going to ask what your event code is. It's by NYC. That's what you're going to want to put in. And just so you know, there are 3 parts where we're going to ask questions. And so as you put in your questions, you'll see a little thing in the upper right-hand corner. Choose the right type. There's, if you have questions about the mortgage, you have questions about agents, this is the kind of stuff where you're going to be able to put in that information. We also, of course, are on social media, so we have a special hashtag for today, hashtag BuyNYC. So if you're tweeting, Instagramming, and all those fun things, please use BuyNYC as your tag. Of course, we do have Wi-Fi, so you don't have to burn up your data as you upload photos or anything like that. New School Guests is where you want to point your Wi-Fi to, and there's a little password thing you have to do with your browser as you sign in. So getting started today, we're going to talk about the real estate market. And so one of the things we love at StreetEasy, of course, is data. We live and breathe with data, and we have a lot of talented people that work with our data. They're called data scientists. It's actually the #1 job in America right now, per Glassdoor, being a data scientist. But it's a really hard job to get because 92% of people that are data scientists have an advanced degree. So it's definitely something you have to work for in school to be able to do this stuff. And we're really excited to have our senior economist who leads our data scientist team join us here. And he has no less than 4 degrees. It's Grant Long.
Awesome. Good. Thank you, Matt. And thank you all for coming this morning. I know it's not easy rolling out of bed on a Saturday morning to listen to an economist. But good on you for doing that. So as Matt said, I'm the senior economist at StreetEasy, which is a really, really awesome job. Because I get to sift through all the data that we see in StreetEasy and a lot of the data we see elsewhere too, and put that together to come up with research and analysis and other parts of data that help you understand your buying decision better and help StreetEasy users make more informed decisions. So that's what we're going to go through this morning. We're going to take an overview of the market and talk a little bit about what's going on. And then we're going to dive a little bit into the economics of home ownership. And then we're going to wrap up with some stats around what's actually listed on StreetEasy and some buyers and sellers markets and what that means. A little bit of housekeeping. I have my Twitter handle up here. I just started tweeting this week. I've been on Twitter for a while, but just started tweeting. If you have particular questions on my presentation, I'm not going to have time for Q&A, unfortunately. But you can tweet at me if you have questions now, if you have questions later this week, if you have questions about analysis that you see on our website, definitely look me up. Would love to hear from you, especially if you see something interesting going on while you're shopping. So having said that, let's dive a little bit straight into the numbers. This is our Manhattan Price Index. So just shy of about $1 million right now. Pretty expensive. That's the middle price. So half the market's above that, half the market's below that. And if you look at this trend over time, you see a pretty solid upward trend, right? So on average, per year, 7%, right? Not bad. You see a small dip down during the financial crisis, as one would expect. If you bought just before the crisis, it was a little bit lower return, but pretty solid on a 5-year basis as well, right? So solid upward trends over time, a little bit of leveling off at the end. And that's something we see right now, particularly in the luxury market. If you're looking at $3 million up, prices leveling out a little bit. Still pretty competitive on the affordable end, though, particularly in Manhattan. One thing to note here to put this all in context, as I promised, these return numbers that I'm quoting here, they actually are a little bit lower than the overall stock market, particularly on the 5 and 10-year basis. So that's just something to keep in mind when you're looking for a home, that there are other opportunities for investment, right? You could invest your money in a lot of other places instead of putting it into a down payment, but you can't live in the stock market, right? So it's worth considering here. You get an extra return from your home investment because you can actually live there. So you're buying a home. Going on to talk about the Manhattan submarkets. Now, submarkets, what do we mean when we say submarkets? We're really just talking about areas smaller than the borough, bigger than any particular neighborhood. Pretty self-explanatory if you look up here what these mean. Downtown at the top of the market there, 1.2 million, a little bit shy of 1.2 million. So the most expensive submarket in Manhattan. That's areas like Soho, Tribeca, no big surprise there. And you see a variety of performance across different submarkets. So depending where you're looking, you're going to see different price trends. Makes sense. And at the bottom there, at the more affordable range, you see Upper Manhattan. And I wanted to drill down on that a little bit. Average unit in Upper Manhattan, and when we see Upper Manhattan, we're talking about north of the Upper and East and West sides. So Harlem, where I live, great area, wonderful area. Washington Heights, Inwood, Morningside Heights, Harlem Heights. Solid upward trend, median value of $673,000. Still pretty pricey, right? But that's half the units are below that, so there's stuff lower than that as well. But these actually have the highest returns on a 5 and 10-year basis, right? So we see really strong investment returns even at the more affordable end of the market. So that's something worth keeping in mind, right? Moving on to talk about Brooklyn. Probably a lot of folks here looking in Brooklyn, which is great. A little bit lower price trend, lower price level than Manhattan, $845,000 for the average middle unit. We unfortunately only cover them back to 2005, but we see some pretty solid trends, right? A little bit above where we were for Manhattan, but maybe not as much as you might think given the rise in national and international prominence of Brooklyn and everything Brooklyn that you've seen for the last couple of years. So looking at the Brooklyn submarkets, again, a lot of variety here, right? At the top there, we see a really interesting trend. We've got North Brooklyn, which has traditionally, for the last couple of years, been the most expensive submarket of Brooklyn. And when I say North Brooklyn, I'm talking about neighborhoods including Williamsburg, Greenpoint, and Bushwick. We've actually seen in the last couple of months downward pressure on prices there. And that's two reasons. And if you've looked in that area and if you've walked around that area, you probably know there's two reasons. Number one, lots of building, right? So if you have a lot of supply that comes onto the market, it'll push down price levels. And number two, people are worried about the L train, right? So location, location, location. If you can't get to where you work for a year or more, that will affect prices. Now, on the flip side of that, Northwest Brooklyn, when I say Northwest Brooklyn, I'm talking about places like Brooklyn Heights, downtown Brooklyn, Dumbo, Boerum Hill, that area. We've actually seen a growing price trend there, and now that is the most expensive submarket of Brooklyn. Right. I'm an economist. I have to talk about interest rates. It's required. They were in the news a lot this year, and I just wanted to talk really briefly about this because it is so topical. Mortgage rates are on the rise, right? So we're up to 4.3% for the average 30-year fixed-rate mortgage. Why does that matter to you? Well, if you're going to finance your home purchase, which presumably most of you are, and you expect to pay a certain amount per month and expect to buy a certain amount of house, that monthly payment is going to go up, right? So for a given mortgage amount, your monthly payment is going to go up if interest rates go up. Now, some things to notice about this chart really quickly to get context. First of all, mortgage rates are still, by historical standards, pretty low, right? See a downward trend over time. And if I added more time to this, you'd see even higher rates, right? Going back. So that's good for you, number one. Number two, a lot of people have talked about the Federal Reserve increasing interest rates. I'm not going to get into that. I could talk about that all morning. That's probably not why you came here, hopefully. We've got a lot of other people talking about stuff. But If you'll notice here, you've seen a downward trend from 2014 to 2016. The Federal Reserve only increased interest rates, and only once during that period. So there are a lot of other factors that go into interest rates other than the Federal Reserve increasing interest rates one time. So just some context there. Some other context I want to talk about the New York City economy. Because ultimately, when you buy real estate in New York City, you're investing in the city, right? I'm really excited about where New York City is right now as a local economy. There's been a really, really strong recovery from the financial crisis. 4.5% unemployment in January. That's lower than the national average, which is 4.8%, which, again, is a forceful, robust recovery from the crisis, which really hit the financial sector hard, which is really the core of the New York City economy in many ways. But there are a lot of other things going on in New York City other than finance. And 1.3 million jobs have been added since the end of the recession, right? And only 42,000 of those are in finance. Why should you care? Well, I think this represents the New York City diversification of its economic base, which means over time, it'll weather downturns better. And I think that's something you have to think about when you're looking to invest in a city, when you're looking to purchase a home in a city. So that excites me. Talked about the market. Let's talk about your decision, right? Is buying the right decision for you? Presumably, if you got here at 10 o'clock on a Saturday morning, you probably live in the city. If you're at a first-time buyer event, you were probably renting. Show of hands, who's renting here? I rent. It's great. OK, cool. So lots of renters. There's a trade-off, right, between renting and buying. And that's what you have to sort of think about when you're looking to buy for the first time. If you own, you get a fixed-rate mortgage, right? Many people get a fixed-rate mortgage. You lock in your monthly payment over time, right? And that's one of the primary advantages of owning, right? As you pay that monthly payment, you're paying down the balance of your mortgage. And that's what we call building equity in your home. And also, if the price of your home goes up, that accrues to you, right? So that's the attractive part of the investment opportunity for owning a home. There's also a slew of tax benefits. We'll talk really briefly about that at the end, but that's probably not what you want to talk about on a Saturday morning. But it's not worth sneezing at. On the flip side, you have to save up for a down payment. That can be costly. You'll face property taxes, building fees, monthly maintenance over time, right? And that's sort of the big cost of home ownership, other than closing costs. Closing costs are really expensive, especially relative to renting, right? So you'll face closing costs both on the buying side, and if you ever turn around to sell your apartment, you'll also face those again. On the renting side, you've got flexibility. You've got other investment opportunities that you can do with your money, with that down payment that you've saved up. But you're exposed to monthly rent, which can go up over time. You'll have to pay a broker's fee, security deposit, those sorts of things. But they don't really compare on the same level in terms of dollars as closing costs, right? So really what you've probably heard before is you need to stay in your apartment for a certain amount of time to have, or be prepared to stay in your apartment for a certain amount of time to have buying make financial sense, right? And a lot of people struggle to put a number around how long that is. So we looked at the data, and we're trying to do that for you. And we find that on average, in New York City, 5 3/4 years is the amount of time that you need to stay in your apartment. Stay longer, that's great. Benefits of home ownership continue to accrue in your favor. Stay a little bit shorter period of time, that's totally fine. You may even make money, but we find, on average, that renting may have made better sense for you. All right, so this is just for New York City. This is what we call the tipping point. Obviously, we see a lot of differentiation across neighborhoods. So I've got a map for you here of where we see high tipping points. These are tipping points that are higher than the city average. A lot of these, obviously, are in Manhattan. So Upper West Side, Upper East Side, Chelsea. You can see on the map it goes down from there, too, right? So Soho, Tribeca. If you're looking in these neighborhoods, that's fine. We're not telling you not to buy there. We're just telling you that perhaps be prepared to stay 7, 8, 9 years. If you're already planning to do that, that's great. And if you stay longer than that, that's wonderful too. But we find on average, it makes sense. These are areas where you should be prepared to stay longer. Now on the flip side of that, We've got low tipping points. And these are areas with tipping points below the average. The dark areas denote shorter tipping points. You can see in Riverdale up there in the Bronx, wonderful area. We've crunched the numbers, and we find that if you're willing to stay for just over 2 years, you can break even versus renting. Forest Hills, similarly. And there's still some areas in Manhattan that are pretty attractive on that front as well. Okay. Now, what drives the tipping point, right? Because we try to do a calculation that makes sense for everybody. I really like the tipping point as a measure because it sort of puts some context around your decision to buy. But we can't make one tipping point for everyone, unfortunately. And I just wanted to put some numbers around what can change that. First off, people may not realize this, but are you married? If you are, good for you, for a lot of reasons. But the federal government would like to reward you for your marriage with an additional tax incentive when you go to sell your home. Really, I'm sure that's probably why most of you got married, if you were married. Terrible reason to get married. So if you are married, that'll actually bring in your tipping point on average, and this is based on the city average numbers, by slightly more than a year. Similarly, we made an assumption about home price appreciation. Simple, 5%, right? If it's going to be 6%, that'll bring it in by about a year. If it's going to be 4%, it'll send it out by about a year. And a couple other considerations here to point out. If you're going to pay all cash, you don't benefit from the leverage you get in your home. You require more money up front. That's more money that you could have invested elsewhere. That'll push your down payment, that'll push your tipping point out by about a year. And finally, we're assuming that you deduct the mortgage interest from your taxes, which is a really great benefit offered by the federal government, again. If you don't do that, that will push your tipping point out by 16 months. Right? But overall, these are pretty robust calculations. So something worth considering and thinking about. Finally, what should you expect while you're shopping, right? So you're on StreetEasy, you want to buy a home. You see a lot of listings, right? You see a home you love, you want to know, how do I interpret this listing? We put some numbers around that, right? On average, listings stay on StreetEasy, these are sales listings, on average 55 days. And from what's listed initially on StreetEasy, we dug through the numbers to find the city records to find out what people actually paid. And people actually pay, on average, 2% less than the initial listing price, on average. Some people pay more. Some people pay above that. But on average, 2%. 30% of their properties have their list prices decreased, their advertised list prices on StreetEasy decreased while they're up on StreetEasy. So that initial price that you see may not be the first one, or may not be the one that's listed the day you go to actually view the apartment. Obviously, again, this changes depending on where you are. Buyers markets, ones that have, on average, higher days on market, are sold at more of a discount and are more often decreased in their listing, or face more reductions in their listing price on StreetEasy, or what we call buyers markets, and they're shown here. A lot of stuff in Manhattan, right? You might notice about this, hey, these sound like really pricey areas, a lot of them. Midtown, Tribeca. We did some analysis and dug into it, and it's actually true across price levels, right? So there's plenty of relatively affordable units in Midtown, not the $3-5 million units. Those affordable units also spend more time on the market, on average, right? So we're not telling you should buy in here, buy in these neighborhoods. You should do your own thing. You do you. But if you are looking here, you do have a little bit, the numbers tell us that you have a little bit more negotiating power, right? And that stands in contrast to what we call sellers markets. So you'll notice geographically these kind of stand out, right? Queens and Brooklyn. So Elmhurst, Sunnyside, Jackson Heights, and then stuff around Prospect Park in Brooklyn. Again, not telling you not to buy here. They're wonderful neighborhoods. In fact, they're really popular neighborhoods, and that's why the dynamics favor the seller. These properties in these markets spend, on average, less time on the market, are less likely to be discounted, and and are less likely to have their prices cut while on StreetEasy. Again, we have a ton of research. I put a piece on the blog this week diving deep into all this stuff. So definitely check that out. We do it across budgets, and I expect we'll be doing a lot more on that over time. Got detailed numbers on what drives these buyers versus sellers markets in our regular market reports as well. All that stuff you can find on our website. Check out our research blog. We've got a lot of really interesting stuff there. I'm really excited about all the research we've got planned coming up. I would love to hear from you. Hence, Grant M. Long on Twitter. Find me. But unfortunately, that's all I have time for today. So thank you guys for coming out on a Saturday morning. I hope that was interesting and helpful. And good luck in your home shopping purchase.